Hello, everybody. Welcome to Talk About House. I'm Todd.
I'm Juana.
Okay, we are going to do a market update to Las Vegas real estate market. Something interesting has happened over the last month. We went from inventory was starting to increase, and now sales were slowing down, and now sales are picking up and inventory is decreasing. So we're going to talk about that and go over why that's happening. Okay. So what we're going to do is we'll start up here with the market action index. Basically, it's still slight seller's advantage. It's been this for about a year. It's been 33 to 36, which is just anything over 30 is considered seller's advantage. If you get way over that, it's seller's. I have no idea why they pick 30. I don't know, but this is the number they came up with. So basically, the market hasn't substantially changed in the last year, despite what you maybe saw on the Crash Pro sites. And does that corroborate with you? Like, tell me about that the last year. Have you seen substantial change, or what does it look like in your world? Stuff still selling for the most part. Some stuff sitting, some stuff selling, right?
Right. I mean, it hasn't been exciting. It's been boring, which personally I like boring because boring is predictable.
Right. We're going to jump over here, real-time market profile. A couple interesting things here. The scale on these are really small, so these lines look pretty big, but the difference, that 277 you see for price per square foot, I'm just pointing this out, is 277.4. And a month ago, it was 277.94. So it's 0.5 per square foot, 50 cents a square foot. Could be noise, it could be anything. It's probably just, prices have declined half of $1 per square foot, which is in line with what happens sort of every year. This time, home prices tend to decline a little bit. Going into October, November, they go back up. I thought I'd point that out, that this is a new thing. It didn't used to have the decimal place. Mm-hmm. It was very granular, 277, 278, 276. Anyway.
I think it probably has more to do with the mix of homes. I mean, I don't think there's signal there. I think it's just noise.
Okay. You heard it from Juana. This was the interesting thing. So we talked about this last week. The inventory basically went up by like 20 homes. This week it went down. Now it only went down by 1, but we've got leading indicator data that shows this is getting ready to start to drop. Juana, is this normal for inventory to decline in July?
It's not. It's not normal. However, again, I think we're dealing with such a short time span that I think it could just be noise. I think we need to watch it over the next few weeks and see if it actually materializes into signal.
Yeah, the other thing interesting on here too is that some of these, like I said, that median rent, I think it's $22.65. I think the next dot up is like $22.70 or something. So it's $5, and remember it's the median rent, so it's just what rented in the last 7 days.
Right.
And what those things rented for. And you can see market action, and you can see the last 3 months. That's if you go all the way over to the left, that's about 3 months ago. That's less than 1 from that line all the way over. So I just thought I'd point that out. Sometimes the scale of a chart is important, and Crash Bros are very good at scaling their charts to make them look worse than they are.
Right.
Okay, here's the inventory chart. What's interesting now is we look back 5 years, we only get to 2020, which wasn't this time 2020 wasn't a normal market because stuff started changing already. So you go back more than this, which we can't show on these charts because we don't have the ability to do that. You would have much more inventory than you do today, but you can see it if you look all the way to the left there. It just abruptly went from going up. And if you look, say, where 2022 is, it was going up pretty rapidly. And then immediately in about September, it basically leveled off and started declining. But it's already started to do that. I don't know if it's going to keep continuing. Maybe this is just a weird summer blip. Maybe there's something going on in the economy. Juana, what do you think?
I don't think there's anything really going on in the economy. I think all of us have kind of lost interest in the economy and world affairs and all of that. I think we're all kind of over it. I think it is just a summer blip. Like I said, I think this is just noise. I don't think it's signal.
Okay. When we go into the market segments, these areas that I've highlighted or circled in red, these are the 4 segments of the market, the top quarter and then the bottom quarter, quarters in between. you had 89. Now these are the number of these are what entered the MLS versus what went under contract. So at 56 houses, basically 1.3 million, which is everything from probably a million to like 50 million or whatever the highest house is, right? 56 came on the market, but 89 went under contract. And you're probably saying, but why did the inventory only drop one? Because that's sold. You have to get to out of the MLS, meaning contingent and active are basically there. So this is a leading indicator. So what we're likely to see next week or in 2 weeks is inventories continue to drop. But this is what's interesting. 30 more high-end homes sold than came on the market. And 30 doesn't sound like a lot, but only 56 came on. So like 50%, more than 50% of the homes that came on the market, I mean, all the homes that came on the market went under contract and 50% more. Effectively, right? That's pretty, if I just showed you those numbers and said, guess what time of year this was, what do you think you would think?
Well, I probably wouldn't think it's the middle of summer. I would probably think it's maybe the beginning of summer, but not the middle of summer.
Yeah, or maybe like February, March, April, May, somewhere in there.
Yeah.
The same thing with the next segment, 74 new, 100 got absorbed, went under contract. 106, and then both of the bottom and the near bottom were 106, and then 123, 146. So stuff is starting to disappear. Now, Wanda, there have been some macro things happen. Let's kind of talk about those. There was possibly this war going to happen in Iran. Didn't happen.
Right.
Okay. There was, matter of fact, airlines are flying back into Israel that had canceled our flights into Tel Aviv. Build Back Better. Or not Build Back Better, the Big Beautiful Bill.
Big Beautiful Bill, yes.
BBB, a different BBB. There's the left BBB and the right BBB. So the Big Beautiful Bill had a bunch of incentives for real estate, a bunch of incentives for real estate. Do you think do you think some people saw that and said, hey, now it looks like a good time to buy a house? Or do you think either of those things had anything to do with what happened?
Honestly, I don't. I think people just found the home that they wanted to buy and they bought it.
Okay, what about a little more stability with like tariffs and all the other nonsense?
Again, I think we've all lost interest in all that. I mean, this is old news at this point. Look, we all have very limited attention spans. And I think we've lost interest in the wars and the tariffs and all the craziness that is outside of our control. I think if you want to put any of this into a macro context, then probably the most I would give it is that everybody's saying, hey, there will at some point be some rate cuts. Maybe 1 or 2 this year, maybe 1 or 2 next year, but there will be rate cuts, so things will get better. And you've seen kind of the mortgage markets kind of toy around with that a little bit. But I think that's probably the most that I would give it to the macros. Otherwise, I think people just happen to have found the properties that they liked and they bought them.
Okay. We did find out that about 25% of all the houses purchased in Vegas were purchased with cash.
Sure.
We don't know what percentage of the other houses were, like how much they put down.
Right. We
really don't know. We can see that just a few houses were FHA and VA. They were very small. The biggest was conventional, but we don't know if they put half the money down or if they put just 20% down.
Right. So we know that statistically speaking, most people put down somewhere between 10 and 20% down on conventional.
Yeah. Okay, price per square foot here. This chart's a little misleading because the bottom's 175. So when you see this, it looks like home prices have like gone up by 10, but they haven't. And if you were to zoom this out and go make that bottom 0, you would not be able to see some of these little dips. It would look like, except for the hump from 2022 when interest rates spiked and it caused home prices to artificially go up for just a couple months. You could basically draw a line across most of this and get a relatively straight trend line there. What's also interesting about this is I didn't round anything. I mean, I just pulled the raw data. This is weekly data. So you can see the dot is today over the last years. And if you look, you can see some downward trends, which is that normal. We talk about this every year, the spring to fall trend. This is where the crash bros every year say, housing is falling, it's getting ready to crash, and here's the proof. And then they shut up for 6 months because everything turns around and they don't realize it's cyclical.
They realize it, They're just getting clicks and they're making money off of it.
They're making money on it. I think we're in year 7 of the housing is going to crash any minute. It's been an interesting movie to watch, actually.
Well, look, even a broken clock is right twice a day. The crash bros, well, they might be right or twice a century.
What's funny is none of the crash bros predict the housing crash. There's 0 crash bros that have any data. Matter of fact, most of them weren't even doing housing crash videos back then. Average days on market here is pretty normal. When you go back and look at 20, 21, and 22, those were super artificially low. This is pretty much a normal market for Vegas. If we were able to go back 5 or 10 years, you would actually see maybe slightly higher days on market. One, it says here, this is the average days on the market, it's like 125. This is misleading too, because if you have 2 houses that sell in a week and 1 house that sell in 8 months, when you average them, you get a different number. But what's important on here is not that number on the left, but you can see that we have basically the same amount of sales now, stuff sitting on the market as we did last year and 2 years ago. We actually have less. And I keep hearing these people like calling me going, Todd, I watched a video that said homes are piling up in Vegas and nobody's buying them. And I'm like, well, but the days on the market is the same as it was 2 years ago. And no one was saying that 2 years ago. And I just showed the inventory. So what's your take on that?
So my take on that is that just be aware of what you're consuming and the source of that. And so I'm going to give you a couple examples. On the news, they had the other day that somehow or other in 2018, interest rates for homes were 2%. Do you remember that? Because I sure don't. Certainly not in 2018.
No, okay. They were never 2%.
So that was on the news that interest rate, home interest rates were 2% in 2018. Then today, home interest rates are 6%. It's like, well, they weren't 2%, so get over it. And then other things. For example, they were talking about realtor commissions are 5.7%, and they're so much higher than they were. First of all, realtor commissions are not 5.7%. They weren't before. They are not now. If you're saying the combined sides, buyer and seller put together, maybe I'll give you that, but certainly not the one side, and that's not what they made it seem like. And there's all kinds of things like that out there. So just be very, very aware of what you're consuming and question it if it doesn't sound right.
What I found is very interesting is the realtors who are writing offers are asking the sellers to pay a commission to them. Mm-hmm. And for the most part, they're doing it because right. When the seller says, no, I don't want to do it, the offer magically disappears.
So here's the interesting thing. So when all of this kind of started to happen, we thought that, well, we're going to be able to get the buyer's agents paid by the seller when there's financing involved. But on cash transactions, that's not going to happen because now it doesn't really make sense. But you know what happened? Nothing changed. Yeah. Sellers are willing to pay the buyer's agent commission on transactions where there is financing on the buyer's side and when the buyer's paying cash. Even though that, you're just kind of massaging the numbers, right? It just depends on which column the numbers are in. At the end of the day, if you're paying cash, that's really not as relevant. But I thought that was very interesting. And we're not hearing that out there from the mass media and other outlets.
Yeah. Okay, I'm going to give you final word what your take is the next 12 months in Vegas, given inventory is not actually piling up and homes are not sitting on the market with no buyers. That article that I posted a couple, like maybe last week, where everybody's left Vegas and homes are piling up. It's absolutely not the case.
So, I'm not expecting anything exciting. I'm expecting for us to continue to have net migration in, meaning that we're going to keep growing. Mm-hmm. I'm expecting that the number of people moving in versus the number of new homes built are not going to match. So long as we have more demand than we have supply, I'm expecting home prices to, at the very least, appreciate modestly.
We have the baseball team coming. I did see an article that the owner of the A's bought like a pretty big house here, mm-hmm. like a high-end house.
Yes, they do.
So my guess is that there's a baseball team coming, and there'll be more economic activity.
Sure.
Whatever.
You know, there are a lot of things going on in Las Vegas. Las Vegas is very good about reinventing itself, about doing things that attract people to come for tourism, attract people to come for doing commerce, whether it's bringing businesses here, getting jobs here, whatever that may be. So growth is something that has been part of Las Vegas's destiny for 60 years at this point, and I'm not expecting that to stop.
And I've been here 50 of those 60 years, except for my time in the Marine Corps when I
Right.
was stationed all over the world. So,
Yes.
yep.
So I think there are good things in store for Las Vegas. I'm not expecting prices to go through the roof. I am expecting modest appreciation. Now, that may not be your neighborhood. So your neighborhood may pop and see a huge appreciation, or your neighborhood may not see a whole lot of appreciation. But when we're looking at the whole valley, I'm expecting modest appreciation.
All right.
That's it.
Yep.
All right, so tell us what you're seeing out there in your neighborhood, whether it's here in Las Vegas or somewhere else. Tell us where you're watching from, and leave us your real estate related comments. Please remember to like the video, subscribe, hit the notification bell, share the video, and we'll see you on the next video. Bye.
Bye.